It's a record this session, so we're always glad of that. Appreciate everybody's work, and we'll have the first bill. I guess we need to let the secretary call the roll first.
Senator Rocky Adams. Senator Alvarado.
Here.
Senator Douglas. Senator Howell. Senator McGarvey. Senator Parrott. Senator Schickel. Senator Storm. Senator Smith. Vice Chair Girdler. Chairman Carpenter.
Here. We have a quorum ready to conduct business. House Bill 170 is our first bill up. Representative Fisher, an act relating to settlement involved minors and declaring an emergency. I know there's a sub, Representative Fisher, if you want to start off with that. Or
Yeah, we'll start out with the sub.
Motion on the sub.
motion on sub, do I have a second? All those in favor signify by saying aye. Aye. Any opposed? The sub is adopted.
And all the sub does is basically remove the 10-day requirement to deposit the check after the date of the settlement.
Okay.
So the purpose of this bill is to allow parents or other legal custodians of minor children to settle small insurance claims or estate claims on behalf of the child without the need or expense of appointing a conservator or a guardian. The act only applies if the proceeds of the settlement are not more than $25,000 net of attorney fees and other legal costs. The bill protects the interests of the minor child because the settlement funds must be deposited into a restricted savings account or a deferred annuity for the sole benefit of the minor child. It permits only 3 circumstances when those settlement funds can be withdrawn. Those conditions include when a court order is issued, upon the death of the minor child, or when the child is emancipated or turns age 18. It provides additional protections for the child. It requires the parents or legal custodians who settle these claims to sign an affidavit certifying that they will deposit the funds into a restrictive account. It also requires the insurance company to make the check payable or electronically transfer the settlement funds directly to the restricted bank account. That's a summary of the bill. It's based on an NCOIL model bill that we passed in 2020.
Second.
I have a motion and a second. Do anybody have questions? Senator Howell.
I just want to make a quick comment. Thank you for bringing this bill. I see this come up a lot in my practice, and it gives parents a good, easy way of doing this for what we view in the industry as a low-dollar settlement amount to keep them from having to eat up additional time and money to handle the appropriation of this, and I just appreciate you bringing it.
Thank you, Senator.
Aye, Secretary, please call the roll.
Senator Rocky Adams. Senator Alvarado.
Aye.
Senator Douglas. Senator Girdler. Senator Howell. Senator McGarvey. Senator Parrott. Senator Schickel. Senator Smith. Senator Storm. Chairman Carpenter.
Aye.
Motion for consent.
All those in favor, we do have a motion for consent. Do I have a second? All those in favor signify by saying aye. Aye. Any opposed? We're on consent. Representative Fisher, appreciate your work.
Thank you, Mr. Chairman.
Thank you. Our next bill is House Bill 350, an act relating to the insurance regulatory requirements. Representative Gooch, here he is. Here our friend is. If you have any guests with you, Representative, I know there may be someone from DOI on Zoom. If you'll introduce yourself, we know you, but for the record and any of your guests.
Thank you, Mr. Chairman and members of the committee. My name is Jim Gooch. I'm a state representative from the 12th District. Appreciate you hearing House Bill 350. I have with me to kind of really explain the bill the Department of Insurance. I think Commissioner Clark is with us. This is a bill that's kind of an accreditation bill. It's something that they have to every few years upgrade it. I think there may be a committee substitute.
There is. Would you like to go ahead and adopt that sub?
Certainly, it would
Motion
be
on
fine.
the sub.
Motion on sub. Do I have a second? Have a second. All those in favor signify by saying aye. Any opposed? The sub is adopted. Go ahead, Rep.
Thank you. The committee sub adds a new section creating a conversation process for provider-sponsored organizations, that's PSOs, to transition to health maintenance organizations. So I think that's pretty much all that does. At this time, I would just be happy to have the commissioner or her representative explain the need for the bill and what we're really doing.
Commissioner, are you on there?
I am. Thank you, Mr. Chairman. And Representative Gooch, thank you for bringing this bill. Yes, this is a bill that relates to the Department of Insurance's national accreditation. And a summary of it is we are amending and providing for the use of the annual statement blank to be filed electronically. Section 2 relates to products that are exempt from the valuation manual. And there are amendments that have to do with group capital calculations and liquidity stress tests. And these are requirements that will be in place by November 7, 2022. So as to maintain accreditation, the department is proposing these amendments to make us in line with all the other states. And if you need any more technical questions, I have those experts here as well.
Do we have any questions or comments on the bill? Do we have a motion?
Motion on the bill?
Have a motion on
Did
the
we
bill.
adopt the
Do I have a
committee's-
second?
Did we adopt the committee sub?
We did adopt the committee
Okay,
sub.
thank
Yes,
you.
sir. And we have a second by Senator Girdler. Secretary, please call the roll.
Senator Rocky Adams, Senator Alvarado,
Aye.
Senator Douglas, Senator Girdler, Senator Howell, Senator McGarvey, Senator Parrott, Senator Schickel, Senator Smith, Senator Storm, Chairman Carpenter.
Aye. The bill does pass. Do we have a motion for consent? We have a motion and a second for consent. All those in favor signify by saying aye. Any opposed? We're on consent.
Thank you, Mr. Chairman, members of the committee.
Thank you, Representative
Thank
Gooch.
you, sir.
Thank you, Commissioner. Appreciate it. That speaker's really sounding good, by the way. It sounds like every time I talk on one, it's enough reverb to barely hear you, but we get to see you at least. That's the good part. Thanks, Commissioner Clark. Our next bill is House Bill 494, an act relating to student education loans. Oh, and it's my representative. Look at here. Representative Deanna Frazier Gordon. I'm having a hard time saying that, Miss Frazier Gordon.
That's fine.
She's a newlywed.
That's right. That's right.
Good to see you.
Thank you.
Always good to see you outside of our district. See?
That's right.
Most
That's
times she's
right.
making sure I come to events and soup bean suppers and all that good stuff.
That's right.
If you're ready to testify and introduce your guest.
Thank you, Chairman and members of the committee. My name is Representative Deanna Frazier Gordon, District 81 in Madison County. I'll let my guest introduce himself.
I'm Charles Weiss. I'm the Commissioner for the Department of Financial Institutions in Kentucky.
I think there is a sub. If you want to go ahead and adopt that sub. Have a second. All those in favor? Aye. Any opposed? Sub is adopted.
Great. And to clarify on the sub, it adds 5 words. In regards to financial institutions, it adds the words "and their wholly owned subsidiaries." So that's the only change in the original and the sub. For many Americans, attending a college or university is only possible by receiving a student loan. However, repayment of the loan can be a burden once the individual completes their education. In Kentucky, there is $19 billion in outstanding student loan debt. 600,000 Kentuckians owe student loan debt, and 18% of all Kentuckians over the age of 18 owe student debt. Student loan servicers are critical in the process in order to provide information to the borrower, to process payments, to deal with late fees, and to work with borrowers regarding payment plans, extension, deferments, and forgiveness programs. There's a need for an agency in Kentucky that has regulatory authority over these servicing companies to ensure they comply with the statute and treat borrowers fairly. I believe there's 15 states that have already adopted these and another 16 that's in motion. So it's something that's not unique to Kentucky. But if there's any questions, Commissioner Weiss is here to address those.
Oh, we have a motion and a second, so did anybody have any questions or comments? We may break our record here on 4 bills. I may need to slow it down. We had Senator Alvarado had made a wager, and so yeah, I think he's gonna lose that. Yeah, it's just there's no money transferring back and forth. Just good fun. He is. We're at 10 minutes right now, so you want to talk any more, Representative Frazier?
I'm done.
All right. Ask Secretary, please call the roll.
Senator Rocky Adams, Senator Alvarado,
Aye.
Senator Douglas, Senator Girdler, Senator Howell, Senator McGarvey, Senator Parrott, Senator Schickel, Senator Smith, Senator Storm, Chairman Carpenter.
Aye. Do we have a motion for consent? All those in favor? Aye. Any opposed? See, we take good care of our House members over here in the Senate. We appreciate it. Commissioner Vice, always good to see you. We got one more. Good. House Bill 643, an act relating to regulation of the mortgage loan industry. Representative McPherson, good to see you. And if you have any guests with you, I see you do. And you'll have to introduce yourself for the record one more time. Good to see you, and I'll let you gentlemen get started.
Well, thank you, sir, and thank you, committee. And my name is Representative Sean McPherson from the 22nd District. I'll be quick and won't make a long speech so that we get out of here on time. House Bill 643 basically does three things. It expands location, it clarifies compensation, and it restructures fees. So that's basically what it does, and I'll let the Commissioner explain any other details with it.
Sure. Again, my name is Charles Vice. I'm the Commissioner for the DFI here in Kentucky. I want to thank Chair Rowland and the committee for considering House Bill 643 today, and I also want to thank Representative Sean McPherson for sponsoring the bill. The DFI has negotiated the changes in House Bill 643 with the mortgage industry over the past several months, and we have achieved broad consensus to the changes to the mortgage statute. As Representative McPherson just said, House Bill 643 accomplishes three things. First, it provides the industry with the flexibility to oversee the mortgage lending process while allowing mortgage loan officers to operate using technology to connect to customers. It also provides clarity on how employees can be compensated. And finally, it updates the fee structure to provide the Department of Financial Institutions non-depository division with a sustainable revenue stream. So I'll address each one of those issues in particular. Flexibility in the mortgage lending process. Currently, statute requires the mortgage lending process to only occur at a licensed location, which can either be a principal office or a licensed branch. As we've all experienced the past 2 years, this is not how businesses operate in today's high-tech world. House Bill 643 provides the flexibility for mortgage companies and brokers to permit mortgage loan officers to work at alternate work locations, while at the same time maintaining acceptable controls over books and records and customer information. This flexibility is also needed to allow mortgage loan officers to conduct in-person meetings at locations convenient to the borrower. This simply aligns the statute with the way mortgage loan companies and mortgage brokers operate today. Regarding employee compensation, the current statute provides conflicting standards regarding how a mortgage loan officer can be compensated. The U.S. Department of Housing and Urban Development leaves the decision up to the IRS guidelines regarding mortgage loan officer compensation alternatives. This bill provides clarity that the DFI will not determine how mortgage loan companies and brokers compensate mortgage loan officers, and licensed companies should follow IRS guidance regarding compensation. Finally, this bill does change the fee structure. The current fees in the mortgage statute were established in 1998. That's 24 years ago, and were last adjusted in 2003 when the fee for late registration was increased from $100 to $250. House Bill 643 transitions the mortgage statute from a renewal-based system that's based on a per-office fee to an assessment-based system. A significant portion of the DFI non-depository division revenue is generated from charging licensees for every examination conducted. This could result in a large fee bill sent to the licensee at the end of the examination. The proposed fee structure would eliminate the DFI charging for examinations. Currently, the examination fee is based on the following: $42 an hour for each examiner hours spent on the examination, all travel costs including mileage and airfare, all hotel expenses, and all per diem costs. Under House Bill 643, the DFI will no longer charge a licensee for examinations. Furthermore, under the current fee structure, the largest amount of revenue is generated from the smaller mortgage companies. Based on the current statute, smaller companies generate only 18% of the loan volume in Kentucky, but they pay 64% of the fees. Conversely, large companies generate 82% of the loan volume and only pay 36% of the fees in Kentucky. The new fee structure would have the largest mortgage companies paying the largest portion of fees. The new fee structure would be based on a renewal fee, which is based on the volume of loans originated or serviced in Kentucky. A factor of 0.0125% is applied to the company's mortgage loan volume in Kentucky. The new fee sets a minimum license renewal of $1,500 and a maximum of $15,000. To give you comparisons to the current range, which the range is looking at the high, low, and the average, currently the low end of the range is $350, the high is $15,931, and the average mortgage company operating in Kentucky pays $2,000. Under the proposed change, the minimum would change to $1,500, the high would be $15,000, and the average renewal fee would be $3,702. Finally, under the proposed fee structure, a mortgage company would pay the high rate only if it has a mortgage origination or servicing of $120 million or more, $120 million. Since the proposed renewal is based on a loan volume of the company, the fee would decrease when the economy is bad and not as many loans are being originated, but the fee would also increase during times of economic growth and more economic activity and more mortgage loans are being originated. Thank you for considering House Bill 643 today, and I look forward to your questions.
We don't have any questions, I don't see. Appreciate that. Do we have a motion on the bill?
Motion on the bill.
Have a motion. Do I have a second? Second. I ask the Secretary, please call the roll.
Senator Rocky Adams, Senator Alvarado,
Aye.
Senator Douglas, Senator Girdler, Senator Howell, Senator McGarvey, Senator Parrott, Senator Schickel, Senator Smith, Senator Storm, Chairman Carpenter.
Aye. Do we have a motion for consent? We do. Second. Senator Girdler shaking his head as a second. All those in favor signify by saying aye. Aye. We're on consent.
Thank you very much.
Chairman,
We appreciate
thank
it
you
very
for
much. How's our time? 17 minutes. We still got time for that joke if anybody's got one. Do I have a motion for adjournment? So moved. Appreciate it. We're adjourned.